Hello and welcome to another video for myatmm.com. It's time to look for some transactions to track or some new positions to get into. So let's get right to it. Here we are in the Thinkorswim training platform, and we're just reviewing the BITO chart, just getting a bird's eye view of what's going around. It's been pretty up and down here lately. So what we need to do is review the transactions that we had put in place last week and record those in the web application, and then also start looking for new positions. So we had placed, let's see, so last Sunday was the 7th. So we had placed the two orders right here, as you can see in the bottom of BITO. We had placed the cash secured put and the covered call. The covered call was filled, so we placed that there. Let's see when the order fill was. So here's the call down here. So it executed about a minute after the market opened, and we had placed the order for 29 cents. Is that right? Hold on. Yeah. So 32, we had placed a 29-cent limit, and as you can see, it was filled at 91 cents. So it's filled considerably higher, which does make sense because we had placed this 29.50 and it was not filled. So I actually ended up having to cancel it, and then I actually placed this 94-cent limit, but at a strike price about a couple dollars higher, because the stock had basically jumped up at market open, which is why the call filled and why it filled so much higher. But I had to move up the cash secured put all the way up to 31.50. So yes, it is only 50 cents lower than what our call is trading for, but I went ahead and placed it anyway, just for the demonstration purposes of running this strategy on on a stock ticker. So as you can see, I placed the order for 31.50 put for 93 cents, and it was filled at 93 cents. So that's what happened. We placed the covered call, it got filled, and we placed a cash secured put at 31.50, and it was filled as well for 93 cents. And you can see those transactions up here in the account statement right there. So we need to go over to the web application and track these transactions. All right, so here we are logged into the web application. It takes us to the dashboard initially. And just to reconfirm before we get started here, we can look at the brokerage price right here, the brokerage value, my bad, right here. So it's $98,010.58. And let me pull up the Thinkorswim on the screen so we can compare. So there we go, we got that comparison. So 98,000, and you can see before we enter any transactions, that's what the balance is right there as well, $98.10.58. So it's matching right off the get-go before we even start adding transactions, so that's a good sign. All right, so the first thing we need to do is we need to log or capture this first transaction here. So we need to come over to the cost basis screen, make sure BITO is selected, which it is. So come down to, all right, we don't have any positions on the board. We do already have own 100 stock, 100 shares of stock. All right, create a new position, and per Thinkorswim, it was opened on the 8th. So we want to go and change the start date to the 8th, and it was a sell to open, and this is a call, and we did one contract, and the expiration date was this past Friday, which was the 12th. The strike price we ran that at was 32, and the price we got that filled for was 91 cents per share, which gives us the $91. And again, so this is in the draft position, so as soon as I click save, it'll move to the appropriate category, which this is a call, so it should move down into the calls, and you'll see this increment to a 1. So I'm going to click save, it'll be removed from the drafts, and it went into the calls, just like you see here. So the next thing we need to make sure of, it should have added this proposed transaction. If it didn't, or if the numbers aren't matching correctly, we can always just click save here again, and it'll produce another record for us down there. So the commission and the fees, as you can see on Thinkorswim, are 65 cents and 2 cents. So here we need to increment that by 1. I just press the up arrow, or you can use these, or you can manually just type it in. It's up to you how you want to use it. All right, so 91.65 to 2, and then press this. It'll put the auto calculated transaction in here. We need to click save, and there, that one is done. Now we need to add this next transaction, which is the cash secured put. Add a new position to the draft positions. Again, the start date is April 8th, as you can see right here. And it's a sell to open. cash secure. The type is a put. We did one contract, and again, the expiration for this one was also the 12th. The strike price for this was $31.50, and the price we got for that was 93 cents a share. And again, as soon as I click save here, since it's a put, it's going to move it down into the puts group right there. All right, so it came out of there. Now we can see it in the puts. It added the proposed transaction down here, the sell to open put, one contract, expiration, the strike price, and the premium we got for that. So look over on Thinkorswim, it's 65-cent contract. The miscellaneous fees is 2 cents. By the way, I think the fees on this are like that because it's an IRA account versus the margin account. I think the fees are just slightly higher, meaning just a penny more because it's an IRA account, at least for the paper trading. All right, click that to auto calculate the transaction. Click save, and now that's been retained as well. So fast forwarding to current date, we can see that the covered call, so the last executed price on this Friday was around $29.28, and the covered call expired this past Friday. The strike was 32, so that's clearly out of the money, so that expired worthless. So we can actually go ahead and delete that, so we no longer have that on the board. That was just free money, basically. And the cash secured put, the strike was 31.50, which is above the 29.28, so we actually got assigned on this one. And if you look over to the Thinkorswim transaction history, you can see that occurred right there. So we bought the 100 shares of BITO due to assignment, as you can see, and that was the cost of it. So what we need to do here, the result is it was assigned, and the assignment date, according to Thinkorswim, was the 13th. So let's just change that to the 13th. The assignment type is stock, 100 shares, because it was one contract. The assignment price was the strike price, which is $31.50. So that's how we get to $31.50. So I'm going to click submit here, and what it's going to do is it's going to generate another stock record or a stock position up here with these numbers represented. So click save, and you can see that appeared right there. And now this position right here is done because we assigned it, and it's done. So we can go ahead and remove that from the positions on the board. And now we need to make sure that stock transaction for the assignment is logged to the transaction history. As you can see, it did not produce a proposed record, so what we can do is just click save right here, and that'll produce the record for us. And again, we do that just because this makes it super easy to get down in here and to save to the permanent one. We could have just as easily just manually typed in something here to add. You can always manually add, and you can manually click these to edit any transaction that you want to. And then you can press that just to cancel if you don't want to save the changes. All right, back to the stock assignment. So $31.50, there are no commissions, there are no fees, so we're just going to move that down. And this toggle right here indicates that it's a stock purchase and not a premium. And so when you click save, it moves it down. So that toggle equates to what these yeses are saying right here. So when there's nothing, those are option premiums. If there's no badge here at all. If there's a badge here that says yes, that means it was a stock purchase or a stock sale. All right, so all the options are off the board. We have our two stock positions represented right here, and the overall totals at the very top. You can see we own 200 shares currently. The cost that we paid for those is $63.50. The current value based off the last trading price is $58.56. We have an unrealized loss of $4.94. Overall, so far we've collected $367.99 of premium. So we are net negative. Like if we were to liquidate the positions right now, we would be a little negative right now. But you don't realize those until you actually sell. And while we're holding it, I'm pretty sure this one even pays a dividend if you hold it longer term. So we always have that to benefit, and we can continue selling covered calls even if we never put any more collateral on the table to like run a put again. But sticking with this demonstration, we are going to go ahead and run a covered call again and look for another cash secured put. Right now you can see our overall cost basis is $31.75. So if you'll notice, we purchased the first 100 shares for $32 a piece, and we purchased the second group of 100 for $31.50. So that does bring our overall cost basis down a quarter to $31.75. And that's kind of, that's the whole purpose of dollar cost averaging. You keep on buying lower and lower, which brings down your overall cost basis for the entire position. And all right, so just looking at this some more. So the our cost basis with premium is $29.91. So if we include the $36.79, $367.99, if we include that in with our cost, then overall our cost basis with the premium is actually $29.91, which is actually just about 70 cents off from what the current last trading price is. So we're close to what the price is currently trading at if we wanted to try and get out of it break even. All right, now we need to run over to Thinkorswim and start looking for a covered call position. This time we can run 2 contracts for the 200 shares, and we can run another cash secured put. So let's do that right now. All right, so here we are back at Thinkorswim's trading platform. We need to go ahead and get our cost basis up on the screen so we have that to reference. So let me do that right now. All right, there we go. So we got our cost basis up on the screen. All right, we need to jump over to the Analyze tab, make sure BITO is selected, which it already is. I can click this button to make sure we can collapse all of them. I had to click it twice there just to get it to do that, but this button right here, if you don't know, will actually expand all of the group boxes, or it'll collapse all of them, so that's pretty handy. All right, what we need to do is we want to look at the next upcoming weekly expiration, which is on the 19th, my bad, which is 5 days away from now. So a covered call, we need to, our cost basis, as you can see, is $31.75. So they don't have anything running at 75 cent increments. So we're going to have to look for the 32s because we want to make sure it's at or above our cost basis whenever we run a covered call. That way we'll never sell it for less than we're into the position for. The only time you ever go lower than that is sometimes you'll refer to the cost basis with premium. Like if you're looking to get out of a stock, you can go down, according to this, we can go down as low as $30 to break even. Basically, we'd actually still be up 9 cents, because we're at $29.91. But you can go up to $30 to get out of this position if it was to be assigned break even, which means we would have basically made no money, but we would have lost no money too. All right. That's not what we're trying to do, though. We're trying to make money and keep all the premium that we ever collect, So we were looking to run at or above the cost basis. So that would put us at 32. So 32 for the next upcoming expiration, we would get 22 cents, it looks like. And I always like to just jump out the next week just to see if I can double that. And if I can, and look at that, I can double it. So that's interesting. I wonder why. Give me just a second. Okay, I briefly jumped over to this website. I just did a Google search on BITO, dividend X date. Looks like it's monthly dividend paying. So the next one's not till May 1st. So I am interested to know why the premium's jumping up prior to that. So that I'm not sure that that's the reason for it. I'm thinking maybe the reason for it is because Bitcoin recently, along with all other crypto, has been crashing here in the last over this weekend, probably due to the news of the war activity that's going on overseas right now. And maybe they're anticipating it'll crash down and then jump back up, as it is notorious for doing. So maybe that's why they're adding in so much premium, because of the volatility that's ensuing right now. So let's jump back over to Thinkorswim. So yeah, here we are back at Thinkorswim. Want to go ahead and get the cost basis back up on the screen just for reference. There we go. All right, and so I want to look at this closer across the next coming weeks. So what you can do is you can come up to this filter, and we are specifically looking just for the 32 strike because we want to analyze that across the next several upcoming weeks. And this is a very easy way to do it. You can filter the strikes to only show 32s. For the 32 strike price. So as you can see, this is the upcoming week for the strike price of 32, and it shows you the put side too, but we're focused on the call side. So the next 3 are right there. Let's expand this one and just the 5th one, because that's the next monthly coming up. Those are usually more popular option trading dates. All right, or option expiration dates, my bad. All right, so this week is 22 cents, but next week, generally, look, 22 cents, for 2 weeks, it should be 44 cents or more, and it is. It's 59 cents. So you can actually get a better per week rate if we did the 59 cent one. And so 59 cents times 2 would put it at like, what, $1.18? So it's definitely below that. So you're not doubling it again by that. Now, tripling it, 22 cents would be 66 cents here. 22 cents for this week 1. another 22 would put it at 44, another 22 would put it at 66. So if you were calculating it that way, this third week is actually still a better rate than you can get for the single week. But again, it's not double what you can get 59. So it looks like 59 is the better deal of the two. So, you know, living with the dividend X date, that will occur after this May 3rd expiration. So the week between May 3rd and April 26th is when the dividend X date hits on this stock ticker. So we're going to go ahead and trade it here, because if I trade it here, I can, like next week, make the decision to sell another covered call, assuming it doesn't go above 32 and call us out, to keep it. A strategy, if you were interested in keeping the premium for that, what you would do is you would sell the covered call here, but when the extrinsic value of this got low enough, you would roll it to a time further out, like a week or two out, something past the X dividend date, because then you would be able to claim the X dividend date. And my experience is if you trade the options with enough extrinsic value, they won't call you out, meaning they won't exercise the option. So you'll be able to get that and the dividend, capture both, if you make sure that the extrinsic value and the option premium that you're trading is high enough, which my rule of thumb is basically if it's at, I try and keep them at 0.1 or above in extrinsic value, which is just the time value that's left in the option. That's just my rule of thumb that I've used, and I've to date, I haven't ever been exercised on something that has an extrinsic value of 0.1 or above. Knock on wood. It's, you know, they can still exercise it whenever they want to, but just that's been my experience thus far. All right. Typically, if this was like a real trading cash account, I think I would probably go for this 59-cent one. But and you know what? Just for demonstrations, I guess we are going to go ahead and just do this covered call like this, and then I'll just run the cash secured puts at the money at the weeklies. So it'll just throw a little variation into this. So that's what I'm going to do. I'm going to go and run a covered call at this strike price of 32, 12 days out. So again, run that. And we're only doing this because we're more than doubling the premium that we can get at this weekly rate. Normally you focus on just the next upcoming weekly because it has the biggest bang for the buck, meaning it has the most time value left in it. But as you can see, you can see the extrinsic value itself. I mean, it has almost triple the time value left in the 2 week. So it didn't decay as fast, meaning this 1 week decayed really quickly all the way down. Normally they don't decay until like that last week, the biggest portion of the time that's still left in the option. All right, so we're doing this one. The midpoint is 625. So we are going to bump this up to 62 cents, and we have 200 shares, so we can do 2 contracts. So we're going to right click on this, click confirm and send, and that should collect $122.70. So we're going to go and send it off. So now that order is queued, and it should run and execute tomorrow morning. We'll monitor it to make sure it does. All right, so now we need to look for a cash secured put that we're going to run on the other side, and right now we have it filtered down to 32, so we want to clear it out. So all you got to do is click that drop down, click reset, and that will reset the filter to show you all of the options once again. And since we're going to run an at the money cash secured put, currently it's trading at 29.28 was the last price it traded at, so that puts us at this $29 strike for the put. And looking out next week to the 29, it's $1.30, so 86 cents. If it was doubled, that would be like what, $1.72 or something like that. So this is clearly not double. So on the put side, it's behaving normally, where the premiums aren't like double when you go out a week, as opposed to the covered call side, it was more than double. You just got to look at them to see if that kind of thing is going on or not. And like as you can see in this example, it could occur on one side and not on the other. That's very common for it to be playing more. It's like that, to be adjusting for more premium on one side versus the other, and not on both sides, like calls and puts. Okay, so we're focused on this $29 strike. We're going to left click on this bid price, which will put the proposed transaction down there. But again, we want to put the difference of the bid and ask, which is the mark. I have the mark on the screen to make it easier to do the math. So it's 89.5, but we obviously can't place an order for a half a penny. So we're going to go up to 89 cents because it's 89 cents right there for the mark, which is just, again, the midpoint between the bid and the ask. All right, we're doing one contract. Right click, confirm and send. So we should get about $88 for that one. So go ahead and queue that up. And that's it. So we have queued a covered call contract. We're selling a covered call for 2 contracts. We're doing it 2 weeks out because, again, the premium is more than double. And we have queued a cash secured put for just 1 week out on BITO. So we will wait and see what happens. I'll adjust the transactions if necessary tomorrow morning to get them to execute. And we will review all these transactions next week. Oh, again, I think one thing that I forgot to do is double check the brokerage fees. I mean, I entered all these transactions and I didn't review or check the brokerage amount on the website. So let's go do that right now. Let's get this off the screen and show that so we can basically reconcile the transactions that we added prior to looking for new positions. Okay, so here we are back at the web application. We need to jump over to the dashboard. And before we verify this amount, just come over to the premium. So you can see in April, we've collected $367.99 so far for the month of April. And what we want to do is check this brokerage amount right here. So we need to bring up Thinkorswim's balance. All right, so here we are. So it's $95,043.24. And that matches this number exactly. So we know we entered all of the transactions correctly. So that's the way that's built into the application to reconcile with your brokerage account to make sure the cash amounts match equally. So that's good. We'll, again, review next week. I want to thank you for watching. Like and subscribe if you haven't already. And go out today to myatmm.com and get your free account so you can start tracking your own transactions. Thanks, and I'll see you in the next one.